Welcome back to the deep dive. Today, we're really living up to the name. We're taking a close look at Visa's Q3 2025 earnings report. And we're not just scratching the surface here. Our mission, really, is to cut through all the noise, the jargon, and pull out what actually matters from these financial reports.
Yeah, get beyond the headlines.
Exactly. We want to understand what's really going on under the hood. And, a key question we're asking is Visa still mostly a credit card company, or are these numbers maybe pointing towards something bigger, a transformation?
That's a really good way to frame it because, while those big numbers, total revenue, earnings per share, they definitely grab your attention.
Right.
But it's those metrics underneath, the details, that really give you the full picture of a company's health, where it's heading.
Okay, so what did Visa deliver this quarter?
Well, for Q3 2025, they actually had some pretty impressive beats right away. Revenue came in at $10.17 billion.
17 billion.
Yeah, and that's a big jump, 14.3% up from last year. And then there's EPS, earnings per share. That was strong too, $2.98.
Up from what, $2.42 times a year ago?
Exactly. And what's really interesting here is how this stacks up against what Wall Street was expecting, specifically the analysts Zacks surveyed.
The consensus estimates.
Right? The revenue, that $10.17 billion, beat the consensus of $9.87 billion.
Yeah.
That's over 3% higher.
Oh, yeah, a solid beat.
And the EPS, $2.98, that also came in nicely above the $2.86 estimate, about 4.2% better. So good news on the surface.
Definitely sets a positive tone. But like you said, the real story, the operational pulse of Visa, that's hidden in the details. So what were those key performance indicators, the KPIs the analysts were really watching, and how did Visa actually do against those expectations?
Okay, yeah, this is where it gets really interesting. So if we drill down into the core activity, Visa reported, get this, 65.4 billion total transactions.
Billion.
And that number beat the average analyst estimate, which is around 64.47 billion.
So more people tapping and swiping than expected.
Seems like it.
Yeah.
It suggests, maybe more smaller, everyday digital payments happening, contactless, e-commerce, that kind of convenience factor.
Makes sense.
Then you look at total volume. That's the dollar value, right?
The actual money moving through the network.
Precisely. It hit an incredible $4,250 billion.
Yeah.
$4.25 trillion.
That number is just staggering.
It really is. And it easily cleared the analyst's average estimate, which was closer to $4,096 billion.
Okay.
This really shows the sheer amount of global spending on their network. It's a huge indicator of, consumer confidence, economic activity around the world.
A global economic pulse check, almost.
Kind of, yeah. And digging just a bit deeper, the payments volume specifically was $3,618 billion, also above the estimate of $3,584 billion.
So strong activity, strong value moving through. But Visa's global, right? How did things look region by region? Was it strong everywhere, or were there, different?
Good question. The regional breakdown definitely shows some nuances, which is exactly what we look for.
Okay.
So in CEMEA, that's Central Europe, Middle East, and Africa, the payments volume was $219 billion. Now, this was actually a slight miss. Yeah, the analysts expected about $219.7 billion. It's not a huge miss, but...
And it could signal something.
It could, maybe some local economic pressures, maybe more competition from, domestic payment systems or just specific market stuff happening there.
Okay, interesting. What about the U.S.?
The U.S. came in at $1,766 billion. That was just a hair above the estimate of $462.9 billion. So pretty much in line, slightly positive.
Right.
Asia Pacific, though, that showed real strength. $509 billion in volume, clearly beating the estimate of about $499.5 billion.
Nice growth there.
Definitely. But then Canada, interestingly, was another slight miss. $110 billion versus an expected $111.8 billion.
Huh. So CEMEA and Canada, slightly below expectations. Asia Pacific, strong. U.S. steady.
Exactly. So while the overall picture for transactions and volume looks great, these regional details show the global payments world isn't monolithic. Different places have different dynamics.
It really is like taking the pulse in different parts of the world via their network.
Yeah.
Fascinating. Okay, so we understand the activity level now, but how does Visa actually turn all that swiping and tapping into cold, hard cash? Let's break down the revenue stream.
Absolutely crucial. Okay, so first up, service revenue. This is usually tied to the overall payments volume we just talked about.
Right.
It came in at $4.33 billion. Just a touch above the $4.29 billion estimate.
Yeah.
Represents about a 9.2% increase from last year. Solid.
Okay.
But here's a really strong one. Data processing revenue. This is the fees for, authorizing, clearing, settling transactions.
The core mechanics.
Right. That hit $5.15 billion, beat the $5.05 billion estimate, and showed a really impressive 14.8% jump year over year.
Wow, nearly 15%. That's significant.
It really is. And it's not just a number, right? It highlights how Visa's pushing more into those value-added services, like you mentioned. Advanced analytics, fraud tools, tokenization.
More than just the plumbing.
Exactly. High-margin stuff that makes their whole ecosystem stickier, shows their tech investments are paying dividends.
Okay, that's a key area then. What about this client incentive line? Sounds different.
It is a bit different. It came in at negative $3.97 billion, which was actually better, meaning less negative, than the estimated negative $4.05 billion.
So they paid out less in incentives than expected.
Precisely. It's what's called a contra revenue. Think of it like rebates they give back to banks and other clients. So a smaller negative number is actually a positive for their net revenue. That showed a 12.5% year-over-year change.
Got it. Less money going out the door there.
Yep. And then there's other revenue. This one really jumped out. $1.03 billion reported.
Way above the estimate.
Yeah, the estimate was around $955.7 million. And the growth here was huge, 31.8% year-over-year.
31%. What's typically in other revenue?
It often includes their newer initiatives, maybe partnerships with fintechs, maybe those B2B solutions they're expanding, possibly data monetization strategies.
So diversification in action.
It really signals that. New growth engines firing up beyond just the core card payments. Really strong sign.
Okay. And finally, international.
International transaction revenue, that's from cross-border stuff, came in at $3.63 billion, just a little over the $3.6 billion estimate. Healthy growth there, too. Up 13.7% from last year.
So pulling it together, strong data processing, really strong other revenue. Feels like that diversification story has legs.
I think so. The numbers seem to back that up.
Okay, so connects these pretty impressive internal numbers to the stock market. How did Visa shares react to all this good news?
Well, this is where it gets a bit interesting. Despite these strong beats pretty much across the board,
Yeah.
over the past month, Visa shares actually returned only about plus 0.1%, pretty flat.
0.1%, that's it. How does that compare to the market?
Well, during that same period, the Zacks S&P 500 composite was up plus 3.6%.
Ah. So Visa significantly lagged the broader market despite the good report.
Yeah, it's an interesting contrast. It suggests maybe the market had already priced in a lot of this strength, or perhaps it's looking further ahead at other factors.
Or maybe just taking a breather.
Could be, but it is worth noting the stock currently has a Zacks rank #2.
Which is basically a buy rating from them.
Exactly. It suggests their models still see potential for it to outperform the market in the near term. So analysts seem to remain positive even if the immediate stock pop wasn't huge.
Right. That's a key point for you, the listener, to consider that disconnect sometimes between strong company performance and immediate stock movement. Okay, so wrapping up this deep dive, the big takeaway seems clear. Headline numbers, revenue, EPS, they're important, sure. But to really get a handle on a giant like Visa, you've got to look way beyond that. It's about digging into those transaction volumes, the regional quirks, how each different revenue stream is performing. That gives you a much, much richer picture of the company's health, its direction, and it starts to answer that question we posed at the start.
Right.
Visa is evolving, broadening its base.
It certainly looks that way.
Yeah.
And maybe here's a final thought for you to chew on as we finish up. Given this strong performance we've seen, especially in data processing and that really punchy other revenue growth,
Yeah.
what might that be telling us about where the whole global digital payments landscape is heading in the next few quarters? How could these specific numbers hint at future shifts, new trends, maybe competitive changes, particularly when you consider that the stock's recent performance was, well, pretty modest compared to the market? Something to think about.